Welcome back, traders. I am thrilled to have you join me for another edition of my weekly price action based technical analysis series. In this episode, we'll focus on unraveling potential trading opportunities from the USD JPY market structure. Before we embark on this journey, I want to emphasize that this video is solely dedicated to educational purposes. My goal here is to equip you with invaluable insight into the technical setup of the USDJPY chart and elevate your proficiency in price action analysis. However, let's not forget the importance of approaching trading decisions with caution and seeking advice from an independent financial advisor to assess the suitability of your situation before making any investment choices. Having mentioned that, it is essential to take note of fundamental factors that suggest the Bank of Japan is leaning towards retaining its yield curve control strategy in the upcoming policy meeting, which potentially have influenced the rise in the USD JPY during the second half of last week. The question that arises is whether this bullish momentum will endure throughout the course of the upcoming week. Well, I have conducted an extensive and comprehensive price action based technical analysis, and in less than 10 minutes, I will be revealing my discoveries using only trend lines, key levels, and of course, chart patterns to gain valuable insight into the historical price movement of the USD JPY market. You may recall that our previous technical setups for this asset reaped over 350 pips from the multiple entries, capitalizing on the bullish momentum that emerged during the second half of the previous week. But before we delve into the technical intricacies of the upcoming week, let's take a few moments to reflect on the key moments that influenced our decisions in the previous week. Now, talking about last week trading session, we saw how the week started with a range just right around that potential neckline of the head and shoulder pattern we identified at the beginning of the week. Then we had the situation where price broke down that structure, giving us a sign that we might likely be seeing a bearish move, but that did not last long as we saw price broke out of the key level and the neckline at the 138.800 level to trigger our first buy position for the week. Though that move did not last long, as we noticed that throughout the first half of last week, price action was just going through buying and selling, giving us a situation that revealed the indecision in the market at that point. And not only during the second half of the week, we begin to see some traction after price broke out of the 138.375, breaking out of that descending trend line also we identified earlier. And it was at this moment we begin to see the traction in that bullish momentum. And thank goodness we were able to rather move all the way to the upside as we scooped in over 350 pips move on all multiple entries we had here. So it has been quite an interesting and profitable week for us all in this community. And for those who would like to review this commentary for educational purposes, then you will be having the link right in the description box of this current video. And if you are watching this from my YouTube channel, you will be seeing the link to the commentary at the top right hand side of your screen right now. So, with that being said, here, let's dive right back into the chart. And the first thing I was able to do here was to go on into the daily time frame where we begin to see how price action had evolved since the beginning of this year. And when you look at the structure closely, what I was able to do was to spot a couple of trend lines and key level, which we are going to be using to guide our trading activity for this week. Now, one of the things I was able to come up with were these trend lines, which of course emphasize the strong bullish momentum in this market since the beginning of the year. And in addition to this trend line, is that very important key level at the 142.00 area, a strong psychological area considering the round figure of that price. And if you look at this level closely, you would agree that this level had been a major determinant of price action since the last quarter of last year. As you will see here, this area was a strong demand zone at one point before that level was broken and retested during the month of November of last year. Then throughout, because of since that last year, we've seen our price had continued to trade below that level to emphasize some selling pressure around that area. And not until the um, last week of the month of June that we finally saw the breakout of that level again. We saw the breakdown of that structure during the second week of this month. And during the last week's trading session, we saw our price action came back to close around that level. Now, you will agree with me that we are at a critical point in the market, and depending on how price action or how participant in the market reacts to this level will determine what our next line of action will be. Now, scaling down into the 4 hours time frame to have a better perspective into what is really going on here. Well, I'm of the opinion that things are still looking very bearish at this point in time if we consider that impulsive move that started at the beginning of this month into that lower point at the 137.00 area. Now, with the situation, with the bullish momentum we have been witnessing here in the last couple of weeks now, we want to remain patient and see how the market will react to the zone at the 142.00 area to determine if this is going to turn out to be a downtrend continuation to the downside, or we are likely going to be seeing a breakout of the 142.00 area to incite another wave of bullish momentum. So these are my views here on the USDJPY, and even I went further to scale down to the 1 hour time frame where I was able to spot. Um, sorry, I need to include this one. So let's go back again. So I want to include this one on my lower time frame. Okay, so we should be able to see it right now. So on the 1 hour time frame, this is what I was able to come up with right now. And as you can see, on the last trading day of last week, we saw how price action has fallen into a range between that key level at the 142.00 area and the 141.350 to give us a consolidation phase and a flat channel to work with ahead of the upcoming week. So we are going to be looking forward to either a breakout of structure to give us an opportunity to buy, or the breakdown of structure to give us an opportunity to sell. We are depending on how price action reacts to the trend line here will decide if we are going to be joining an uptrend continuation or a sell-off in this market if price action breaks down the trend line. Now, with that being said, here from the technical standpoint we have observed on this chart, I want us to also take into consideration the fundamental aspect of the market. And for those who have been with me for a while now, you would understand by now the importance I have placed on the fundamental factors as it often manifests on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. And this information here will give us a better timing to position ourselves in such a way that we can catch any potential trading opportunity ahead, during, or even after this event. So, from the economic calendar, I was able to spool out a handful of high impact events from both economies, that is the US and the Japanese economy. Now, the first high impact event is coming in on Monday, July 24, and that is the S&P Global for manufacturing PMI and, of course, the services PMI. Then on Wednesday is the most awaited federal interest rate decision coming in from the US economic docket. Then on Thursday, we have the GDP data annualized for quarter 2 from the US economic docket. And on that same day, we have the consumer price index from the Japanese economy. On Friday, the Japanese economy will be projecting an interest rate decision too as well, which everyone in the market will also be looking forward to. Then on that same day, we have the core personal consumption expenditure coming in from the US economic docket. So these are very high impact events that majority in the market will be looking forward to. And in fact, the anticipation of this event will definitely be reflected on the chart as price action. So at this point in time, I would like to pause the video here. So our center of focus will be within this consolidation phase we have here, where either a breakdown or breakout will welcome trading opportunities for the upcoming week. If you have found this content helpful and useful in making your independent trading decision for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it helps the algorithm to promote the video to a wider audience of traders who may find this material beneficial. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and, of course, receive notifications whenever I upload new videos and commentaries. See you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.